Hey guys, what's up? Welcome to this channel. It's your boy Sammy. In today's video, I'm going to be walking you down to understanding how to read chart patterns on the 4 hours time frame. Now, this is one of my favorite calls because I love the 4 hours. 4 hours actually has more higher win rate in tendency in terms of placing a trade. Using the 4 hours analysis keeps you safe. Like I can actually boldly place a trade on 4 hours and allow it to run, mostly because I understand that it will take longer time for the market to reverse, but it also takes longer time for the market to come to your POI in 4 hours. Now for beginner traders, I would advise you use 4 hours in doing your analysis. That way you are able to stay profitable, because when you're new into the market, your tendency of rushing into the lower time frame like 1 minute or 5 minutes is actually high, because you want to quickly get the money and just get out at once. But it doesn't work like that in Forex. But if you're able to work with the 4 hours, it will keep you patient and make you master patience, which is what the ultimate goal in the what industry. Now in this video, I'm going to be walking you down to understanding what to do when the market comes to your POI. Now there's something called POI, this point of interest, where you are bound to place your entries in the trade. So if this is something that you like, stick to the end of this video. You're gonna get value for it. So let's go. If I'm dealing with 4 hours, there's something I like to do. I like to start from the daily. Now this daily takes us a clear picture of what the market is doing. Let's take for example, this is GU. So what's the market doing? The market actually what? Bullish. Now all of this looks like there is no point or there is no direction, but there's a direction, because why? The market is actually bullish, as you can see. So if we were to analyze this, we'll say this. Okay, higher high, higher low, higher high, higher low. Now for those beginners traders will be thinking, higher high and higher lows looks as if the market is not actually moving like this, like the way you expect it to be moving. So but I need to understand something. The market is bound to show you what you know, but not actually in the way you expect it to be. Okay, so that's why you need to advance your way of saying things. While I was taught, I used to think market would do something like this to me and I will understand, but some of the times it does something like this, something like this, something like this. Yeah, so you get confused and be like, what's up? It's still the same thing, just that it was just playing around here. It was just playing around there. It's still the same thing, still the breakup structure that you always know, but just that it wouldn't come the way you expect it most of the times. And your ability to be able to read this thing while it happens, it was going to be giving you what advantage. And I'm going to be outlining market analysis and chart pattern on how to read it on 4 hours, and equally using other blocks to align it. Okay, so what do we see here? This is a breakup structure. So market then moved to the upside. It broke this trend line here and it dropped. Now where is it coming from? Like I said, we're going to be outlining other blocks. So this is an order block. So the market came here and actually moved to the upside. Now why am I saying it came to this order block, and why is it valid? Why is this order block valid? Let's zoom closely so that we can get to understand why it is valid. Don't forget we're in the daily, but we're going to be moving down to the hourly time frame. But we want to understand what is happening here with the market in the 4 hours before actually getting involved. Now this is it. The reason the market came here was because if you look closely here, like I said, this was a breakup structure. So this order block here was the last one that took price to the upside. So if you draw your trend line here like this, sorry, let me take this back. Okay, let's see if we can get a trend line. Okay, so as you can see here, this was the last order block that took price to the upside. So when the market wanted to move up, it needed to have come back here But what I'm outlining here, okay, let's see something here. Yeah, this is the other block in my mind. Okay, I think that was the one the market respected. Good. This was the other block on my mind. So this was the other block the market respected. Now I want to point out something to you here. Notice something here. Like I said, we're actually moving in support and resistance. So this other block was the one the market came back towards, sit as what, turning as from resistance to support. So this was the support level in the future that price respected. Price respected in the future. Let's move up. Yeah, this was it here. In the future before actually started going up. Let me take this back. Okay. Yeah. So you can see it here. You can see it here. These are the block. So before price started going to the up. Now don't forget, there are two things that I like to map out. One, major swing point. This is a swing point. This is a swing point. Now if I miss this entry, where's the possible entry for me to get in? I will be waiting for price to take this high here, because I said we are moving up like this. So I'm expecting price to be taking upward, the highs come back down before we start continuing to the upside. But what did we see happen in the future? Let's see. Okay, price has now come. Now we have what you're looking for. Guess what? There's been a break of structure here at the upside. So price has taken the upside. So what we're expecting is for price to come back down. But in this case, it didn't. It did something different. Okay, it is something different. So now, but there's a question that I always want to ask: how long can you wait for the daily time frame to come up? So what we can actually do is go down to the 4 hours, and your duty is to just make sure that whenever the price comes to key levels, you are looking for opportunity to buy. What can we see here? It's simple. Like we know in the daily, the market is actually what, bullish. So all what you're going to be doing in the 4 hours is looking for opportunities for us to get in on the buys using our other blocks. So this is a break of structure, right? It's a break of structure. So what are we expecting to do? We are expecting the market to come to this other block that led to the break of structure. Okay, this other block that led to the what, the break of structure. Now one of the ways I use in knowing if the market will come back to this particular other block is seeing something called inefficiency. Now inefficiency actually means price had a gap, so it's going to be coming back there to fill this gap before moving up. Don't forget what I said, there's a gap here, there's a gap here. So this is called the fair value gap. It's a little bit advanced course. This video is advanced, it's strictly not for beginners mostly, but it's a little bit advanced. So what do we see here? We see a fair value gap, so we're expecting price to come back to this zone in the future before going back up. Since we have the break of structure here, our confidence remains that price is going to be coming back down. Price is going to be coming back down. And what did we see price do in the future? Came back to the other block, touched it and started going up. Now what did we see next? Don't forget, we keep breaking structure, so we have another break of structure here. So now the question should be, where is the next possible entry for us to get in? It's simple. all we have to do is zoom closely and see, do we have a fair value gap here? The answer is yes, we have a fair value gap. One of the ways you can identify this fair value gap is after you've drawn your trend line, you always notice a gap. Let's see that. After drawing your trend line, you always see a gap. Okay. Let's start from the top. Let's see how it works. Someone was asking me a question like, Simon, how do you draw this trend line? Well, we just follow what the market has done. That's just it. It's not a complex stuff. Just look what price is doing and just start drawing your trend line. Okay, should I keep it this way? I'm seeing multiple ways of doing this, but let's see. Okay, I'll keep it this way. Now, reason being, I'll say this as market giving a signal for a trend line reversal. So market give me a signal for a trend line reversal here, 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 and here. So now ask yourself a question: what happened to this gap? Didn't the market see it before going up? They saw it. They're going to be coming back for it in the future. Now someone will be asking the question like, how do I get in? Like, how do I trade this? Because I can't really wait for all of this 4 hours to happen. Well, if you are a swing trader, then you should be trading the 4 hours time frame using the daily and the 4 hours down to the 1 hour, the minimum 50 minutes. Okay, it's just like that. Then if you are a day trader, you can use 1 hour to do analysis, but this video was strictly for swing traders, but day traders also use it most of the time. Just take for example, if I come into the chart and the market wants to give me an opportunity in the 4 hours, I can look for the opportunity of major order block here on the chart on 4 hours. Then I go down to my lower time frame to look for opportunity to get involved. Now take this from me, whenever the market comes to your POI, now like this zone here that I drew, this POI here is called POI because I'm expecting price to come here, which is my point of interest to get in. So whenever I get in here, before entry, the market will definitely reverse. How? It will not just move up like that, it will reverse before going up. Let's go to 15 minutes. Yeah, 15 minutes is good for entry. It will not just go up like that, like I said, it will reverse. Let's see if we can find it. It will reverse before going up. Now this reversal does not happen majorly in the 4 hours, it happens in the lower time frame. That is what gives you the edge that you need to get in. Let's see if we can find it. In the 4 hours, the candles take 4 hours to print each candle, while in the 50 minutes it takes just 50 minutes to print each candle. That's why you can see that the candles are much here than it's where in the 4 hours. And 4 hours also give you clear picture of what price is doing. Gives you a clear picture of what price is doing, so that way you are able to stay profitable, understanding what has happened in the market. Once I pass this stuff, okay, I think this is it, if I'm not mistaken. Let's see, let's just stay in the 4 hours. Okay, 1 hour. Oh, okay, now this is what I wanted to say. Now this is a POI, right? But notice something, the market did not just come to the POI and started going up. It did few things. I'm going to be showing you few things here. The first thing the market did was what? It has a change of character, a break of structure, like we always call it. Break of structure. It came back down here, deceiving some folks that were buying here, buying here. Now what did it do? It came and filled this gap here before dropping down to this other block. Now giving us what entry trigger here. What does this one show? A preceding pattern here for us to get involved and put our stop loss below this. So whenever your market comes to your POI in the 4 hours, you have to go down to the lower time frame to get a confirmation of what is happening in the higher or time frame. If you gain any value from this video, don't forget to support us by subscribing, leave a comment in the section below, and also like this video and share to your friends also. Thank you.